Hello and welcome to the Dukascopy TV studios here in Geneva. I'm Sam Meredith and I'm joined today by a partner at DynaCapital, Simon Aeschbacher, and we're here to discuss alternative investments. Thank you for joining us, Simon.
Thank you, Sam.
No problem. So, firstly for today, with increasing volatility in the markets, we're seeing that ever more now, there are going to be winners and losers, clearly. So, could you comment on potentially who's going to benefit from this?
Yes, Sam, you're absolutely right. There's been increasing volatility last few weeks or months, and after a period of 3.5 years where volatility has been low without real spikes, and the volatility came in equities, but also in fixed income and in currencies. So normally periods of low vol have been beneficiary to passive investment types, people who were just investing through ETFs and with a more passive asset allocation. So obviously now with more volatility, the other side should be working the more active, the real alpha generators. So I think that's going to be the case, and I think the right strategies will be global macro, long-short equities, potentially CTAs.
Okay, so you mentioned equities a couple of times there, and a real problem is lack of liquidity on that front. So prices can be seen to move down very quickly. How can hedge fund investors be able to cope with that?
Well, it is right. I'm actually not thinking that there is a real lack of liquidity overall or generalized. There's lack of liquidity in certain instances, and that has maybe one or two main reasons. One reason clearly is today markets are totally electronic. People can access from everywhere at every moment electronically, which gives them a faster access and move everybody at the same time in the same direction. Plus, the second reason is that for that increased volatility, that since the financial crisis in 2008, other investment banks have stricter rules in terms of capital, so they put a lot less capital to facilitate trades. There's less market making in fixed income, for instance, with their own books. That also is a factor of increasing volatility. And if then a situation like on August 24th occurs where everybody wants to do the same thing at the same time, there's just huge liquidity at that precise moment. And that's negative for some of the players if they're not positioned well. On the other hand, it's also the opportunity, because if I can give you an example, the stock of Celgene was enormous on August 24th. That went down 22% to rebound 18%. So that's if somebody has done its own work and sees stock prices move down and he can buy. And that happens because everybody goes the same way. So if at that point you know what you want to do, you go the other way, there's a huge opportunity.
Okay. Well, what about central banks then? I mean, they've been really struggling to combat the world's economic woes, I suppose. And I mean, if we look at the bond market's outlook for inflation, it's as low as the last financial crisis, as you referred to earlier. So, I mean, are people simply losing faith in central bankers?
Maybe. I wouldn't say losing faith, and I think also here it's difficult a little bit to generalize. But clearly, that monetary policy as a tool to revamp economies, people are losing a little bit faith. That's for sure. But on the other hand, if you look back at the financial crisis and what after the Lehman debacle, what the central banks were really needed, and I think they did a pretty good job. Then also you have to differentiate what central banks, what their mandate is in certain circumstances. I mean, for instance, the U.S. has a growth mandate plus an inflation target mandate. The ECB has just price stability as a mandate. The other factor that's important, I think, is that is not only monetary policy that's important to get economies going. It's also lots about fiscal policy. That in certain areas, like in the eurozone, you have one of the big problems that the eurozone has one monetary policy, but each country has its own fiscal policies. So that really is not really good for growth, and people cannot together revamp the economy. And I think this is the case going what we experience now with what the central banks have done is that monetary policy has its limit, especially if it's not helped by fiscal policy. And I think if we really want to, that needs to be better orchestrated potentially in order to get the growth everybody needs.
Okay, Simon, thanks for your insight. It's great to have you here.
Okay, thanks, Sam.
And thank you for watching. Be sure to keep clicking back to Dukascopy TV for more updates and exclusive interviews. See you next time.